Very good morning, friends. I am Nalnakshi Swami. Welcoming to my channel, Smart Index Edge. To my group, I asked simple question in my WhatsApp trading group. As an option buyer, what is your biggest challenge? I posted in terms of a poll like this: late entry, CEP confusion, premium decay, false breakout, stop loss hit before move. Strike price selection, entry timing, profit booking too early, holding losses too long, over trading, choppy market confusion. So, the most of the traders in my group had all the problems, almost all the problems. They chose false breakouts, choosing the wrong strike price, poor entry timing, booking profits too early, holding losing trades too long, choppy market. As, at first, I thought these were technical problems. But then one trader sent me a message that completely changed my perspective. He wrote, you can see over here, for option buying, the biggest risk is that when we see some loss, either I sit or average position, hoping to exit at either cost to cost. That is normal, actually, because of the wrong entry. Earlier, I have made my such mistake. Second is the social media is flooded with information that option buyers lose money. Technically, he has mentioned that I have listed all the points, and he says my personal feeling is many traders have all the problems, only the intensity level of problems are different. Among all in one point, number 12, he wanted to add a point, psychology of retail. When I read that message, it is very important. These are not just trading problems, they are psychological problems too. A false breakout doesn't cause a loss by itself. Definitely. A false breakout doesn't cause loss by itself. What happens? A wrong strike price doesn't cause a loss by itself. The biggest loss happens when fear, hope, greed, and hesitation start making decisions instead of you. You start making decision by fear, hope, greed, and hesitation. So many times you hesitate to enter, many times you fear to enter. You enter fear of losing, and sometimes you enter hope. You will hope that you enter at a big candle, hoping that it will blast like anything. But to your disappointment, it starts coming down. So these are the things. That's why today I'm not going to give you theory. Using one real trade, one real chart, I'll explain how these 6 problems appear in live market, why they happen, and more importantly, what you can do is improve your decision making. So if you are an option buyer, watch this video till the end because you may recognize yourself in one or more of these situations. See, let us start with the first one is from the false breakouts or anything. See, for example, let me go to the chart. Let me take you. Let me see, you have noted all these things. Let me open the chart. Let me clear all the drawings. So, what are all the problems I came to know? Here, what happens when the market opens? This is the previous day low, and previous day high. Before closing, it closes here. This is the closing price of the market. Let me take this one. This is the closing price of the market. Let me change the color. So many things come into the market. You will be watching before the market opens, so many news. Your mind is flooded with so many news, overnight news, war news, nothing. And even you watch the world market and you watch the gift nifty, so many things. Don't do anything. Don't do anything. Mark the boundary of these previous day high and previous day low. This is simple. The price has moved within this boundary. And when the market opens, it is opening outside the boundary. When it is opening outside the boundary, immediately you think, oh, it is a gap up. And you start seeing the red candle, you think, oh, it is going to fall. It is going to fall. Immediately you calculate in your mind, start calculating the mind that maybe it is going to go down, because you have taken some people might have sold, writers might have sold here, option writing, because it has been rejected over here. By seeing this candle, they might have sold. Or some people, they might have bought BTSD trade, and when it gaps out, they start covering their position. These are the things, which activity happens when market opens. These are the reactions of the traders. When the market opens, it is the reaction of the trader. Then why can't you wait? Why can't you wait? If you wait, the reaction will subside. Definitely. It applies to our day-to-day life also. See, when there is some reaction, you wait. So definitely those reactions will subside. When you boil a milk, it cools down. It doesn't go on coming out. You switch off the stove, it cools down. It has to cool down. The market has to cool down. The usual simple thing is, next what you do is, what is the problem is, you enter immediately into the market. Everybody. Why? That is the FOMO. FOMO, I'm going to miss out this trade. FOMO of missing out the trade. Don't do that. Stop. That is the first step you need to do. Then your psychology will not affect. You are watching the reaction. Watch the reaction. First step is watch the reaction of the market. Reaction of the market. Okay. Next step, what you need to do is, what I do is, I see the swing from where it has fallen down, from where it has risen. So I mark this level. You are getting this level. It is clear. Then, if the market would have measured more, if the market would have moved higher, this should be the target. From there, the swing edge should be the target. That is the measured move. I mark it. Okay. Then, if the market comes down, same measurement, I put it down from the top of the candle. See, what I did is I measured this and I measured this. The market did not, I marked this level and I kept quiet. From this candle, I just put a level this. So I get the level. So market, this is my area. Even if the market comes down, it can put its leg down to this area. I got to know this area. You measured this. So you are getting two levels to the bottom, two levels to the bottom. Maximum market can come down. You should be prepared for that. When it jumps up, it can jump down to this level, can put his feet here. Then this is the step you are doing. Do it routinely. Do it routinely. Then you will come to know. See, let us see. This is the closing price. Market jumped here. But the swing has started here. From here, the market has started its swing, up move, and it has opened here. So you anticipate the market to go to this level, and if it comes down, I'm going to get a level over here. Like this, you mark the level. Then it solves your problem. Next step is, see, when the market, I mark these levels and this is the boundary. Okay, now put a rectangle over here and the middle point is coming to 24,328. And also you get a level where the market is midpoint of the market. That is, I'm getting 24,300 around. That is my strike selection. What I did not act on the reaction. I watched the reaction. What the first step is telling? Do not act on the reaction, watch the reaction. Then I measured everything, swing, and anticipated this much move in the market and this much down and this much up in the market based on the swing. That is the thing you need to do. You need to do. Wait for some time. You get a level. Then you may ask me when it gaps up too much. For that also same thing. You can do that. You will be amazed to see how it works. So next step is 24,300 call option. I selected. You selected the 24,300 call option and the put option. Both the pairs you select. When you select, you get confused. In live market, you get confused. For that, to solve all the problems, I created this indicator. This is the indicator which compares both the behavior of the call option and the put option at the same time. Right? Same time, see what happened? I selected the call option and the put option. And what did I do? I marked these levels and anticipated these levels. Anticipated these levels to come. On an average, it can come down this much, it can go up this much. And then next, after watching the reaction, I selected the strike price and added two. I'm not going too deep out of the money call option or too deep in the money call option. By seeing the reaction and by calculating, I selected this strike. This is the way you have to select the strike price. If you do not have the money and don't go for the cheap call option out of the money, cheap out of, because they are, delta will be 0.2 or 0.3. They will not, for the 10 points move, it will not increase 2 rupees. Only 0.5 delta will get you at least 50% of the move. Suppose if the market moves 20 rupees, you will get 10 rupees in the move. That is the idea. If you do not have money, don't trade it. Okay, I selected the call option and the put option I applied on my chart. See, this is the indicator, and this is option, Nalini option dual premium indicator. It plots, automatically plots both the call option and the put option. Simultaneously, you can watch the behavior of both the call option and the put option. See, here you can see the market. This is the call option. This is the put option. What the behavior happened? On the Friday, the put option came down. Immediate reaction. I've selected let me select some other tool. Okay. Okay, let me select this. Okay. Put option came down and the call option went up. Right? Call option went up. So I know how much it can pull down, put it like with the Nifty option. So you have to wait. Do not enter into the trade in the opening bell. That is the reaction. Reaction should not be traded. If you then you know that balance line was 24,300. I selected these two strike prices at the 24,300. So what happened? Market gapped up and this call premium started coming down and the put out. This was when they went down, this is putting its feet down and it is putting its feet up. Only the put option will dominate if the price of the underlying starts moving like this. Red candles. Let us make it red. It will start moving like this. But you see the behavior of the candles. It comes down. This is the seller's area because they have sold it and it is reacting, sucking the liquidity, and it is reacting and closing inside the balance line. You put the balance line and closing inside the balance line. At the same time, this call option is coming. It is not doing the same behavior. It is losing its premium. It is giving you discount. And automatically, my indicator plots the balance line, average price line, CEPE midline. That also gives you value, 90 rupees. See, the market is coming down. You are in the territory of a positive then, and you wait for this. This is the mistake what you do. You enter into the market. See, you will be seeing a green candle. You think it will go straight away up. No, it will not happen like that. So I have included the theory of compression, expansion, and convergence. See, they were converged, compressed, and because of the compression, this was the release action. What happened in the market the next day? Then they will try to converge. This is the natural phenomena, and they will try to converge. Another hack in the market, even if you feel difficulty, you can open the chart, open the settings, and base grid, chart grid zone is there. I've added chart grid zone. I've added call option at the top. Since I've added call option at the top, you make the chart grid line column. If I make the chart grid zone as a column, see, you are in a positive area. This is all the positive. Just to check yourself whether I can enter at the discount. You can do that. And same thing. Okay. Let me change the call option to the put option. See so clearly. Or you make it to the put option. Put option first, if you are trading on the call option, the direction is entirely positive. See, this put option is going down in the bear territory. This visually makes you to be in the trade, and the market is giving you a significant down. So this is the discount where you are entering. Okay. Another problem in the market is you enter by seeing this big candle. This is the reversal candle. I've added a reversal, this one grid, this one blue color. You enter into this candle. Never ever enter into the big candle. This is a big candle reaction engulfing these things. When your risk to reward to this candle, suppose if you enter at the top 126, your risk is 111. 26 to 111, you can imagine 15 points risk. 15 points means in percentage terms, you will have to risking 12 percentage for this trade. So wait for the discount. Market always, after a big, huge candle, it will tend to reverse. That is, the first candle also did the same thing. Okay. So it tend to reverse. Okay. Or you can make like this, same funda. This is the measured move. You can anticipate the target to be 141. And from here, the next candle, the low, you mark this. You can anticipate 116 or 100, you can keep your stop loss 114. Because it is a bullish candle, you are entering, your target is this much, 141. You should have, the market was very tricky. What it did not cross this level. It did not cross this level. It stayed in this level till 11:20. Every day it will not be there. There, market came here. You should have patience. And then it rallied. It gave one more. See, the range has expanded from this area. This is another promising way. Range has expanded over here, and you can anticipate measured move 1:2 in this 153. And it went, even if it may give you 1:3 also. You can anticipate 1:3 move. So almost it reached that target, 168 to 171. This call option gave you this is the problem actually. What is the problem? You experience this actually. First step, what you did, you acted on the reaction. Instead of that, watch the reaction and anticipate the ranges of movement. And the next step, apply this, select the strike price based on this anticipation, like this. And then apply this, when you select the strike price, apply this indicator, both call option and put option premium, and you know this is in a clear territory. Even if it comes down, it is in a positive territory. Below this only, it becomes negative. The market becomes negative. Same thing you can do on you apply the same indicator. You can apply the dual option indicator. Okay. Let me remove and go to the settings and make it as chart grid zone as an column. So here you are seeing the base grid line. This is the base grid line of the previous day. Market and base grid line and the area where green columns are there, mark this level and remove the settings. Make it a normal setting. Chart grid zone, you make it a norm because you cannot see properly. If everything is green columns, you need to see you know this area is green. This is the green area. If you still feel that, you take a block and this is the way visually you will be comfortable and psychologically you will be comfortable. So entry, timing, see you everything defined and try to enter with the least stop loss. See, the grid zone is still positive. The grid zone, it has stepped up here. That is also another clue. You can keep the stop loss. It may not hit. Try to be, if it starts moving below that, something is cooking there. That is the thing. You enter, hold the position, not entering at the top. People do mistake entering at the top. See, the market moves in swings. The market moves in swings. If you select this, see, the one level it went and another level it comes down. This is the swing. Market moves in swing. Market doesn't move straight away up. If it is moving straight away up most of the time, you must be knowing that price goes here. This is the problem for the market. So these are the problems, and you start, when it starts coming down, you enter here, you start averaging. Immediately you will start averaging. So that, let me cover my loss. Do not do that. First step, if you follow, watch the reaction, then you will bring in discipline into your market. You will not enter too early. Entering too early creates, and if your position is going, suppose you have entered here, do not average. If you cannot make out what it is going to happen, then erase your trade. You can always better enter again. Do not enter wrongly. Do not average position. But with my option premium engine, no confusion. Both the call option and put option behavior, you are seeing simultaneously with the boundary levels. You can make out what is happening in the market. You are not going to do any mistake. Many people are not understanding the basic funda and they are trying to trade that. Even in spite of making many videos, they are not seeing my video. Pathetically, I can say this much. They don't want to see the video. They take the indicator, immediately they do that. Many people, some people are very wise enough to wait and they see my video twice, thrice, or 4 times, and then they will understand the basic concept. See, without the concept, I have not made any video. From now onwards, if you start doing this, these are the tricky thing. Every day, you all of you anticipate once you enter, market should appreciate. Immediately, you raise your trades with the one single candle. That is the problem with the traders because they enter late. They enter here. When it starts coming down, they close it. They get relief by any other green candle comes here. The market will not behave every day same way. Every day, see here, after all this accumulation process, see the back-to-back green candles. See the behavior of the candle. Here, indecision. They are accumulating. They are spending the time. Market has spent time till 11 a.m. And also notice the time. Every day around 11, something will happen, 11:30, and around 12, that is the London session opens, that time most volume will creep into the market. From the other time frame traders, that is London session, the market will get volume into the market, so some sort of behavior will change. So notice the changes around that area. See, it is the London to Europe session is 1:30. So from 1:30, you have seen the market correcting, but it has this premium, call option premium. It has back to the pavilion from where it has started. Did it go? Did it go? Enter into the bear position till this level. Till this level for tomorrow. Suppose if it comes down, because premium will decay. It is a decaying instrument. It can even come to this position. It may stay positive. That direction may stay positive in the market. So tomorrow, what should be the trade? Same way. See, I am not going to guess the trade or anything because I am marking this regular thing, marking here up boundary and up boundary, and market has not lost its base. It is within the base and it has put its leg down. The balance point here is 24,364. Then I will, from here, it can, if it gaps up, I can anticipate the movement to this area. And if it gaps down, let it open. Let the market settle. Let me measure all these things. Have patience. Psychology is you cannot blame. The problem with the traders is hope, greed, and everything. So you do mistake and market will not listen to anything. Market is dependent on the order flow, volume, and the price behavior. If you start doing that, definitely you will stop losing. Option buying can also be a very good. See, option buying sometimes when it goes sideways, premium will not expand. On that day, you will tend to come to know the range actually with the help of my Nalini precision engine. If you apply the Nalini precision engine, I'm applying the Nalini precision engine. Let me hide the dual option premium. I've mentioned it. You get in the morning itself, you get the layers. Morning itself, you get the pivot, support, R1, R2, everything. You get this boundary. What more you want? What more you want? And it maps the previous day levels. These are the previous levels. Even if the market, this is the area from the resistance to pivot. So you can anticipate it as a support. With the action premium engine also, it makes your different. And everything is positive. The Gann Hilo trend is positive. Everything is positive. With the Nalini precision engine also, you can trade better. Even if I apply the 24,300 call option, but sometimes it becomes, what is the direction? It becomes a difficult thing. See here, I've applied the 24,300 call option. See, you are getting the previous day resistance area, support area, and market has gapped up from the previous resistance area. It can put its leg to R2 or to the pivot. This is you can mark these areas. These are the areas of support because it has jumped up. So you know this 101 and 85. So, and also you know this area. This is the resistance area. You put a line for these levels, if you do not, 121, and it is coming down. Automatically, Nalini Precision Engine is also plotting supports. Right? When it is plotting supports, you know that it is not crossing any territory. It is giving a discount after the gap up, and you look for the reversal. For that, the Nalini Premium Option Engine helps you with the all the possibilities you can enter precisely. In the Nalini Precision Indicator, also you get the buy thing, and you can do. Another question was asked by the trader, the position sizing. Position sizing, let me go back to the option premium indicator. When it starts moving away after the reaction, when it starts moving away, you position. Suppose you have entered, you have sold the put option. He is a writer who has asked me the question. You have sold the position top. Enter with only one, sell with one lot and top up with, when the direction is confirmed, top up your position sizing. Position sizing can be top up with confirmation. This is the confirmation that market is not going to, call option is not going to fall. The direction has been confirmed. When the direction has been confirmed, top up your position of put option. Suppose it is around, if I place the cursor, it is 91 or something. Then you top up your position, it came down to 50. You could have topped up your position and hold the position. For a option writer, it is not a problem. It is a decaying instrument. As the option, this price moves on, it goes up. So let me make the indicator chart grid zone as a proper step line chart, and for your convenience I've made. So same thing. What is the position? You measure from the, so measured move, you anticipate this much decay from this 38 rupees or little bit. Anticipate measured move from this bottom. You have topped up your position and you got the destination. You got it. You have sold at 90 rupees. 90 rupees. You are selling at, your topping position size increased with the confirmation. Always. Here also. You increase your position sizing or average your position, only it gives you confirmation. After this breakout, green candle, direction is confirmed. You can top up your position when it pulls back. It pulled back so many times, it was a stressful. But simple observation, what you see is it has stepped up. The grid has stepped up. The grid is not declining. And also simultaneously watch what is the same time, what the grid of the put option is doing. It is declining. Grid is declining. That itself is indicating that market is the put side is declining column. So confidently you can average your position and be profitable if you have money, or trade with a single lot. Master with single lot, then your emotions will be in control, then you can trade better. So I have covered almost all of your problems, and it eases your psychology. This option premium engine eases your psychology. So if you want to get access to this indicator, this is a paid indicator. You message me on this number 98452 09600. You will get all the details about it. Please do watch the video till the end. There are a lot of very good informations in the end. Watch it, rewatch it, and understand the price behavior. Most of the traders come to trading without the basic knowledge of technical analysis. They don't understand, they don't study, they don't try to learn the technical analysis. They want straight away market. But if they press the button, they will get money. If they think like that, they will come into the market. This is not so. You have to do hard work, then only everything will become clear. And I've made the trading very easy by considering all the problems of the people. This indicator has been created. Thank you very much, friends. Nalnakshi Swami signing off. Do give thumbs up to my channel, and also do comment your feelings about this video. Thank you very much. Nalnakshi Swami signing off.